the last 6 months, I've taken a total of 3,048 trades, all of which took zero of my effort. Reason being is because I've been using algorithmic trading software to do all the decision making for me. In this video, I want to go over the last 6 months of using this software and dive a bit into its performance over this period. Without further ado, let's get straight to it. Welcome back. If you're new to the channel, my name is Matt Jimenez. I'm an entrepreneur who has worked with the greatest minds in finance over the last several years, and I'm here to pour into you guys everything that they've poured into me. Now, this video is going to be a $50,000 journey update, which I've been documenting this series to show you guys exactly the efficiencies of using software to trade in your portfolio for you, rather than having to chain yourself to a computer and trying to figure out what setup is good for you, what strategy is good for you, how to even execute trades effectively. I've completely automated that and put all of those efforts in the hands of an algorithmic trading software. And I've been documenting this journey for you guys so you could see how well it performs, one, and two, how easy it could be to implement something like this in your portfolio. If you haven't seen from the very start, just go ahead and click this series up above and you'll be routed straight to when I initially started this account, and you can see its overall growth. Now, before we dive into the data of its performance, I'd like to just prompt you on exactly what I'm using and how I'm using it. So the software that I'm using is called the FedBot. It's a software that you attach to your brokerage that executes trades for you on your behalf without you actually having to go in on the charts and try to find a trade that suits you or at least suits your strategy. And it executes, so it enters the trades and it exits the trades, and it does it at a pretty high volume. In order for someone to be able to match the volume that this software is able to do for you, you'd probably have to spend most of your life chained to your computer. So not only does this work effectively, but it also has bought back a bunch of my time without me having to learn how to trade, what to trade, when to trade, and so forth. Now, the cool thing about this software is you're actually able to adjust the risk parameters to whatever suits you best. So if you want to be more aggressive and you want to take on more risk to try and have a bigger reward, you're able to do that because you have full sovereignty over the software. Now, the settings that I'm using on this account is even below what the recommended position sizing is. So my account is extremely conservative in comparison to what a standard account would be or what all these people are doing in the community. If you joined the community, you'd be able to see a bunch of people doing insane amount of numbers. But again, not all of this is copy paste, nor is it indicating future returns, but people have done upwards of 10%. I've even seen 20% months, and they're all doing this using this software or a plethora of different kinds of softwares to find these returns. And the cool thing is they get to adjust the risk, like I was saying. Now let's go straight to the performance. Okay, so here we have MyFXBook, which is a third-party verifier of the performance that we're using on this exact account. I titled it the Fed 50K, keeping it simple and easy for you guys to find. So since we've started the account back in late October, technically beginning of November is when it actually was able to have active trades, we've done a grand total of 23%. Our daily change is 0.1%. Our monthly average is 3.2%. Our biggest drawdown is 2.44%. Now, for those of you that don't understand drawdowns, it is simply a fluctuation in your equity curve. Now, the way the software works is it doesn't actually close out the trades in negative, so it doesn't reflect into your actual overall account balance. It is called an unrealized drawdown. This means that you actually never took the loss. The way that the software works is when you start to have a drawdown, it's not closing out the losers. It's only closing out the winners, keeping the balance in your account high, even though there may seem to have a drawdown. Remember, it's unrealized. And also on the flip side of that, there's such thing as unrealized gains, meaning you may be extremely up on something, but if you never closed the trade, it was unrealized because it never reflected in your account. Now, let's get back to the performance. The account was started with $50,000 in there. There is currently $61,544 in there. And to the far right over here, you can see our equity curve. It is extremely smooth and pretty absent of any drawdowns, if you ask me. This looks like really, really steady growth. If we just scroll down a bit, you could see the total profit here is $11,544.76. Now let's get into some of the stats here really quick. So as I said in the beginning of this video, we've done a total of 3,048 trades. Right here is the amount of trades we've taken. Let's see how many of those we've actually won and how many of those we've actually lost. Underneath will show us that this is the profitability. So we've won 2,513 trades out of 3,048 trades, which means we are 82% profitable. We've only lost 534 trades out of 3,048 trades, which represents an 18%. So that's putting us extremely profitable at 82%. Now, if we move over to the far right, over here is a very important piece of information that I like to look at. It's called the profit factor. And over here, you could see it's a 2.31. What that essentially means is we're willing or looking to gain 2.3 to lose 1. This is also known as a risk to reward ratio. So we are risking 1 to gain 2. And that is the most simple way that I could put that exact metric. If I hover just above it, the profit factor shows how many times the gross profit sum of all winning trades exceeds the gross loss. Sum of all the losing trades, the higher the value, the better. So typically when you're a day trader, you always look for a 2R, and that's like the lingo that goes around risk to reward ratios. And this is definitely it, because now we're gaining 2 times what we're risking. Now, if we just scroll down to the bottom, let's see how we did for the month of April, considering that this video is actually dedicated to April's performance. As you can see, April, we did 4.7%, which is actually extremely good in comparison to a lot of things that you could have been invested in. Now, the best thing that I would say about this software is its uncorrelated performance in comparison to many other assets. So let's say that you are heavy on your portfolio in equities. Well, now you're pretty much in tandem with the performance of the economy. Now, when the economy can be doing well, now your portfolio will reflect that. But when the economy is doing bad, it'll also reflect that. What I like about the software, like I said, is it's uncorrelated. So regardless of how the economy is doing, whether it's doing good or bad, it doesn't matter, because the software is actually playing both sides of the field. It's playing the long side and the short side. And the way that it works is it scales into positions and offsets any drawdowns with profitable trades and continuously closes out the winners and then scales into the losers to slowly exit those out. And what I found, as you guys can see, it's been extremely profitable. I haven't had a losing month nor a losing week, and I've already done 20+%. Now, I don't know another asset that's better than that in comparison to its uncorrelated performance with everything else and its passive nature. Nothing is passive, but this is as close as you could possibly get from what I found. And if you're interested in the one that I'm using, the link is down below. Just go ahead and hit that link, and we'll see if you can get your hands on a software like this to continue to perform in your portfolio for you. Like always, my friends, peace.